Type 9. Type 9. Type 9. Type 9.
Good morning, everybody. Welcome back to another webinar by the Everyday Growth Advisors. Today we have Fibonacci's. How excited are you guys to learn about this concept? I feel like this one is the most misunderstood tool in our entire trading realm, and I'm kind of glad that you asked me to do this one because I would really like to break it down to the core for you guys so you can understand this one, bring some value for you guys in this webinar, and hopefully anybody else who is watching this stream right now. So welcome in, good morning. I hope you guys are having a great day so far, even though it's early. Thank you for tuning into the webinar. These webinars are exclusively educational. And yeah, I want to, kind of break it down today. Not much going on with market movement here, just to give you guys a quick little rundown here. NASDAQ still within this downward channel here. We will not be taking any moves until we get a break above it, or a break above this significant level here. You need to keep making higher highs and higher lows in order for us to consider the trend reversed. As of right now, we don't have a confirmation yet. We'll look for a rejection somewhere here. This may be a rejection point, but also we may look at a couple of other things as well. So we'll see how the market performs this week. I said this week is going to be an important week to see if we can climb back up above, or is there going to be fresh downside. So we'll see what happens, right? The VIX slowly creeping down, but we'll see. We need to break below these moving averages, something like this, and a continuation of a downtrend for us to really stay below this little move here. So we'll see if we actually get it, and then we can get a confirmation to start taking bullish positions again. I don't like hedging here, but it's going to definitely be interesting. So welcome in, people who attend this webinar. I hope that it gives you some value, and let's get started here. So Fibonacci's, the guy who created, the concept itself, the guy who came up with the concept, the golden ratio, that's what the Fibonacci represents. It's the repeatable number, which is called the golden ratio. Okay. We're going to talk about this today a lot, and you're going to hear me say this a lot, the word golden ratio. Okay. The golden ratio, which is 1.618, and then it has repeating numbers after, going forward, has a lot, it's infinite numbers forward, right? It's like pi. And this is denoted by the Greek symbol phi, which is the golden ratio. So this will be, the basis of what you're learning today. Okay. Now, the first things first, the guy who invented this thing, or he not really invented, but he made a discovery. Okay. So who was the guy? The guy is this guy. Okay. He's a cool dude. This guy was a cool dude. Okay. He was born sometime in 1170. His name is actually Leonardo Pisano. All right. And they called him Fibonacci, but his name wasn't actually Fibonacci. And this guy, he actually made an observation. Okay, he made an observation that there were things in nature that used to come in repeatable sequential numbers. So we're talking about repeatable and sequential numbers. For those of you who are attending this webinar for the first time, this is the approach that EGA takes for all of its courses. I want to make it extremely clear because this is the concept that I teach. This is the way that I like to teach. We go through a peel the onion process, where we start on a big concept. We start from the outer layers and we go towards the core. I like to call it the peel the onion concept. Where initially you don't know much, you peel the first layer back, and then the second layer and the third layer, and by the time you're done with the concept, you've reached the core of it, and now you are crying, but you are much more happier because you've made yourself a nice little dish. So I hope you enjoy this, style of learning, because it's something that I have developed over time. And, the past 8 months, I didn't know that I would be, interested in teaching. And honestly, teaching is like, you got to learn how to teach. It's interesting. It's definitely an interesting thing. Like, I never knew I would be, okay at teaching. And turns out that, I actually came up with my own way to teach. And so I like this concept where, I break it down from the core. I like to, introduce a concept and break it down to the full extent so that you understand first, who is this guy, first of all, right? What the hell did he discover that, led to this thing that we are using in stock markets? Why the hell are we using it? You know what I mean? Like, yeah, you could go to Investopedia and, search what Fibonacci's are, and you'd probably find a good explanation. But you still wouldn't understand the basis of who this guy is, what happened, and how he came up with this stuff, and, why this happened. And then there's another guy called Gann, right? David Gann. And, he's got another way to do things, right? So you need to understand, like, the history behind it, why they use it. And then, when you use it, you understand why you're using it. What's the purpose of learning something and not understanding why you're using it, right? Do you get what I'm saying? Like, do you agree with me? So this guy, he was born in Pisa, right? And he took his son with him, and he wanted to become a merchant. Okay, so he took guidance under a Muslim teacher who guided him learning calculation techniques. And back then, obviously, math was not so advanced yet. They were using Indo-Arabic numbers, and his education started in this place called Beaya, and continued in Egypt, Syria, and Greece. And then, he returned to Pisa in about 1200. Okay. Now, in the next 25 years, this guy dedicated himself to writing the manuscripts of these Liber Abaci, and the Practica of Geometry. Okay. So you can think he was a mathematician who really took a keen understanding of what mathematical concepts he was amused by. Okay, and so his revelation was actually based on this concept. It was the idea which took him to understand how would a rabbits, if they were born, right? How many pairs of rabbits will be born in a year, starting from a single pair, if each month each pair gives birth to a new pair? Okay, think of it like a mathematical problem, right? And when the new pair becomes reproductive from the second month, then how do you calculate that number? Okay, and thus the Fibonacci sequence was born. All right, and so, for example, here's an example, right? The first month you have an infertile pair, then the next month you have a fertile pair, right? And then the fertile pair, and then you have 4 of them, and then you have 6, and then you have this many. So, that sequence is the Fibonacci sequence. Now, he realized that, this sequence doesn't just appear in rabbits. He actually realized that this sequence appears in everything around him. And that was simply mind-boggling, right? So what other things do Fibonacci's appear in? Well, the truth is, they appear in a bunch of natural things. In fact, they are all around us. You are surrounded by Fibonacci numbers every single day in nature. Okay? And every single thing around you. All right? And I'm about to show you what are those things. And then you will realize, oh my God, now this makes complete sense. Now, when I'm understanding why it affects the stock market, I actually understand why, right? Instead of just going to the millions of videos on YouTube that tell you that it exists because it exists, you need to understand that this was forged in our DNA, all right? As human beings, as living objects, as non-living objects, even non-living objects. So, as we have been born from stardust, the stardust that makes us up has a DNA of a Fibonacci repeatable sequence. Okay? Now, the important characteristics of the sequence is the fact that the ratio between any number and the previous one in the series tends towards a well-defined value of 1.618. That is the golden ratio, or golden section, which is what we call phi, okay? And this frequently occurs in nature. This is the idea behind the sequence. Okay, so let's take a look at things that are affected by Fibonacci, right? So here's a couple of things. Sunflowers. Think about it. The way the spirals go, right? The way the design of it is, they are easily found. You can easily find Fibonacci sequences in them, in the spirals. Okay, in daisies, in sunflowers, in cauliflowers, in broccoli. Okay, they're all there. And think about leaves, right? When you cut a leaf, the next leaf appears. You know, they grow in a sequence where it's a Fibonacci sequence. Okay, and so these are all things that occur around you. Here's some other stuff. Look at snail shells. This is the Fibonacci golden ratio. Okay. Look at plants in general, right? Look at our galaxy. Okay. Look at hurricanes, spiral staircases, right? Then the egg itself has a Fibonacci sequence in it. Okay. Plants, our fingerprints. All right. Look at all these. Our spiral galaxy, right? I was telling you earlier. Okay, even the human body has a Fibonacci sequence. All right, even the human body. Okay, look at our face. Our face has a Fibonacci sequence. So a lot of things have a Fibonacci sequence. Okay, but the main idea stemmed from the revelation of how rabbits were multiplying. Right? Okay, isn't that crazy? So we took that forward and we've been studying it over years, and these are commonly occurring numbers in nature. Okay, that's the general idea that you need to know. Now, what is the golden ratio, right? So the idea is this, okay? If you have a line, if you have a measurement, okay? Well, AB to AC, AB to AC, the ratio between AB to AC, okay, it's the same ratio as AC to AB. It's basically the same thing, right? This to this is the same as this to this, okay? That's the idea. Now, that creates a situation where you can understand mathematically that things move in a orderly system. Okay, there is a system where things move. And not only that, there is a momentum to that system. Okay, so which means to say, between A to B, there is a certain subset of numbers that drive that momentum, okay, on that linear point. And then from A to C, there is another subset, right? And those two ratios are equivalent to each other. Therefore, between a point A to B and A to C, there is a sense of direction and a sense of understanding on why those ratios are balanced. Okay, so it's explained here, when two segments are in a golden ratio, they create a sense of harmony and balance and appear incredibly appealing to the eye. All right, and it almost seems that the human brain is particularly susceptible to this ratio, and it's found anywhere in nature. Okay, in the spiral shape of a snail, seed, sunflower head, bark, pineapple, pine cone, da 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 da. You get the idea, right? Expansion of the galaxy, blah blah blah. Okay. Okay, I'm not going to go too much into this. Now there are also rectangles where there are the golden ratio, right? Okay, and then there are spirals as well. Okay, so these are all different ways the Fibonacci is constructed in our lives. All right. Now, the important thing here to understand is, how the hell does all of this relate to the stock market, right? Well, remember something. What are we constantly dealing with in the stock market? For example, here we're looking at the S&P 500, right? The ETF, SPY, right? And just as a random example, right? But what is it that the golden ratio, or how does the golden ratio apply to financial instruments? Well, the idea is pretty simple, right? What are we dealing with every day? We're dealing with price targets, we're dealing with price retracements, we're dealing with prices, 2 points between two prices, point A to point B, where we are trying to determine what kind of a price momentum we want, right? It could be from this point to this point, it could be from this point to this point, right? The idea is every single day, you are looking at different ranges of price action, okay? And these different ranges of price action, they come with a natural, repeatable sequence, all right? And that is where the Fibonacci tool comes handy, all right? It is a natural tool that you can use, okay? It's a natural tool. So majority of trading platforms have this built in now as a tool you can use on TradingView. You can go on this thing over here. If you click down here, you'll see Fibonacci retracement. Now, the Fibonacci retracement is not the only thing. You also have Fibonacci extensions using a trend. You have resistance fans. You have time zones to predict a future price action. You have Fibonacci circles, spirals, arcs, wedges, and channels. You have many different types of Fibonacci's now. Okay, and these are all tools. I repeat, they are tools for you to look at where the mathematical construct of the price action is likely to break down in your favor or against you. Okay, so now the important thing, right before I even go into how to plot and this and that and blah blah blah, before all this, the first important thing is, what are our general Fibonacci points? Okay, so here are the most common ones that you can use. All right, and these are, now I don't know if the standard Fibonacci comes with this, but you need to understand that these are the most common ones. Okay, and the ones that you really want to take note of are the 23.6, 38.2, 61.8. Okay, the 1.618, which would be up there. Okay, and then the inverse of the 1.618 is the 0.618. Okay, why? Because that's simply 1.618 minus 1, so that's your inverse. Okay, it's your inverse. Okay, which is the flip side of it. So if the extension is 1.618, then your retracement on the other end has to be 0.618, and it's going to be a negative number, right? Okay, and then you also have 2.618, okay? Any number with the 618 sequence is a golden number, all right? And then you have also this times 2, okay, which will be the 4.236, all right? These numbers are all important numbers in the Fibonacci sequence. Now, we don't commonly use these two. We commonly use all of these, all right? And you can actually omit a few points out of here if you wanted. And also, the other additional points that we use are going to be the 1, which just means it's a full extension to the upside, and -1, which is a full extension to the downside. Also, the 0.5 is usually used for a retracement, showing a 50% movement from the top to the bottom. All right? We don't use the 0.5 majority of the time on the inverse side, because it doesn't make sense for a extension. For an extension, the golden ratio is more of a better point for a target. Okay? All right, now we can finally understand. All right, now we're peeling the layer suddenly, right? Okay, now you understand, where does the thing come from? You look at, okay, what the hell are these numbers, first of all, right? How are they playing with our stock market? Okay, so then now you need to understand that how do you plot this thing, okay? How do you plot? See, if you just jump into starting to plot everything, more than likely you're gonna fail. And let me tell you, you could watch 1 billion videos on YouTube, and none of them are gonna break it down to explain to you from start to end why the heck you need to understand all these things first, right? Because all they want to do is feed you the information from Investopedia or some other website where they are summarizing the stuff, right? But they don't understand where it comes from. What are they using it for? They just think it's a hocus pocus tool, like a magic tool that you can use and it works. Okay, but you need to understand why it works, because if you don't know what makes something tick, then how the heck are you going to use it accurately? Okay, now before we get into this, the right way to use a Fibonacci is, there are altogether 2 ways. All right, there are 2 ways. The first is a retracement. You use it as a retracement tool. Okay, that's number 1. Number two, you can use it as an extension tool. Okay, so there are a majority, just these two ways that is most commonly used. All right, now for a retracement, you will get targets. For the downside, this is usually a bearish scenario. Okay, target downside. All right, and for a extension, you guessed it, target to the upside. Right? Okay, simple to understand. Right? One is for a downtrend and the other for a uptrend, right? So when are you supposed to use these two? So let's break them down into each one of these concepts, okay? And we'll take it slowly so that everybody understands, and we're not going to rush into things because we understand that peeling the onion is the most important process here, right? We want to learn things slowly. We want to make sure we get them done, okay? And you know, I don't know if I'm going to include this in the technical analysis course because I feel like I've already covered it here. I think I might just choose to cover another concept, or maybe I'll do a more advanced explanation of Fibonacci's in the technical analysis course in the future. But you know, the idea is you need to understand each one of these and how to use them. Okay. All right. So let's. How's everyone doing so far? Is everybody doing okay? Let's get a couple of comments here. By the way, welcome in, guys. Good morning. How are you guys enjoying the stream so far? Drop a couple comments. Tell me if you are learning anything so far, and how you find this webinar. Also, make sure you leave a like if you can. Honestly, it really helps me out if you can just take a second out of your day to like this stream, press the thumbs up, so that this stream reaches more people. That is really important because we want to provide free education for as many people as possible here on the Everyday Growth Advisors platform. And if you are enjoying it, then I would really appreciate you smashing the like button. Okay, great, thank you. All right, cool. So appreciate Great, thank you. Yes, absolutely. I'm about to get into the time frames. Relax, chill, man. Come on, Elliot. Come on. No, I'm just kidding. Chill, bro. I got you. We're gonna get into time frames in a second. Let me explain them first from an extension perspective and a retracement perspective, and then we'll get into the plotting, the nitty-gritty. Okay. So first of all, let's go through the retracements first. Okay. So you have first of all, it depends on what your type of trade is. When we're talking about time frames, okay, when we're talking about time frames, you have to ask yourself, what is the time horizon of your trade? Are you doing a scalp? Are you doing a day trade? Are you doing a swing trade? What kind of a trade are you doing, right? If it's a scalp, you're going to take a 1 minute to 5 minute time frame. Right? And you should refer to my other videos on the webinars. If you haven't individually watched these videos, you should be watching these videos first. Okay? Day trades, what do? 5 to 10 minutes. Okay? This is the general time frame. Okay? And then for swing trades, you would do 1 hour, right? 1 hour plus. Okay? For more than a swing trade, which is a position trade, right? Which is something we take for a longer term, this is 1 day plus, right? 1 day chart, right? So this is your time frame. If you're looking for, if you're doing a Fibonacci retracement for a scalp, you go look at the 5 minute chart. If you're looking for a day trade, look at the 10 minute. If you're looking for a swing trade, do a 1 hour, right? Okay, so that's the idea. Simple and easy method to start and end your process, okay? Now, so in this specific case, let's say we are talking about SPY here, right? And we want to do an analysis. Now, let me tell you the reason why majority of people aren't able to successfully draw fibs. Problems with fibs. Number one, perspective. What do I mean by perspective? Fibonacci's are meant to be plotted from a area point A to an area point B to give you a ratio between the 2 points. Now, for stock market's purpose, what we usually do to achieve the point from point A to B to find a golden ratio in between, we use a swing high to a swing low or a swing low to a swing high. So it's either a high to a low or it's a low to a high. Okay? Between these 2 points is what we can generate our idea of what the specific ratio would be, right? Do you understand? It's like 2 numbers, right? Between 336 and 356. We want to know between these 2 numbers, where do the individual ratios lie, right? And so do you understand that if you view a certain swing high differently from my swing high, which maybe I say is here, then our Fibonacci's would be drawn completely differently. So the perspective of you having a different subjection on what yours is mine or mine is yours is what causes the issue here. Okay? This is why people fail drawing Fibonacci's. Well, the point of the matter is you need to be good at understanding support and resistance, first of all, and then understanding how to plot these. Okay, so understanding, first of all, where your support and resistance points are, which, by the way, on Thursday we'll be having a webinar on supply and demand zones where I'll show you how to find supply and demand zones, right? But if you haven't watched my video on support and resistance, you should absolutely watch that one, right? That's my pinned video on my channel. I find that it's probably the most important video I've made in my entire career, right? You can go check it out. It's usually pinned over here, but right now it's because this is my live stream, so you know it's showing this one here. But you need to be able to understand where the highs are and where the lows are, right? And that kind of boils down to understanding where support and resistance is. So let's look at an example of a retracement and how do you find it, right? Now, obviously, in this 1 hour chart over here, you would be an idiot sandwich if you don't know where the swing high is, right? Obviously, this is the swing high, right? This is a high point. A swing high is simply a point where the stock hits a resistance and fails to break that level, right? But is the highest point at which it swings. It's a swing, right? Okay, it's a pivot point. Now, where is the swing low, right? Where is the swing low? Well, assuming that you were trying to find the retracement for this extension, right? We had a more stock market move up, and assuming you didn't see all of this, right? You didn't see all of this. Let's assume that we don't see all of this, right? Because what would be good? Any idiot can plot a Fibonacci if you know what the price action is, right? Well, where would the swing low be, right? Where is the swing low? Well, if this is a swing high, then where is the next point at which there was a support? This is the level here, right? So therefore, this becomes your swing low and your swing high, right? Therefore, if you want to plot a retracement down, you have to go from a swing high to a swing low. Okay? You go from high to low to get the retracement. Alright? So we're doing retracement first. Okay? So now what we can do is we can get our Fibonacci tool and we know this is the high, this is the low. Okay, so let's grab our Fibonacci tool. This is the high, right? This is the, and we're going to start a little from this side so that we can get, entire range here, right? So we're going to do it like here, okay? So swing high, you can see the line, you can see my dotted line, right? It's there. So swing high, click here, and then drag it down. And you see where it's 0, right? It says 0 here. This is what you want to line up with your Fibonacci tool. So here you go. So 0 here, right? Okay, this is our support. So, okay, here is where we want to land our Fibonacci. Okay, perfect. Now we can see where our golden ratios and where our points are for the retracement of this specific stock to fall. Now, remember, you do not have access to this information. Okay, you didn't know where it was going to go. You only saw this and then you plotted your retracement. Okay, remember, we're doing retracements first. We'll do extensions next. All right. Now, can you see what happens, right? Okay, the first point over here. Now, you need to understand a couple of things, okay? Now, for Fibonacci levels in general, okay, there are a couple of tips and tricks that I can give you, okay? Now, for a bearish scenario, okay, the key thing to watch for is usually the 23.6 and the 38.2 retracements, okay? These two numbers are the first level of defense. Okay, this is the first level of defense for bulls to contest. And you can see what happened, right? As we dropped, we had, and remember, these go in waves, right? So if you haven't watched the waves webinar, you need to go watch the waves webinar first. It comes in waves. So you have your impulsive wave down and then a retracement wave up. And look at where that was up to. It was your 38.2, right? That was the first wave, okay? The second wave, where did it go? It went down and then came up to the 23.6. Right? This is your first line of defense. Now, if it fails to break these levels and go back up, then you know that there is a chance for a lower extension, okay? But the thing is, over here, the reason why you can't say it with 100% certainty is because, for me personally, I was thinking this is just a correction, right? This is a correction. So corrections are usually pretty shallow, okay? Now, if we fail to break these levels, then usually what happens? We go further down. Okay, and we came up to test this 23.6 one more time. We failed to break, and therefore we started to go down to the next ratio which matters. So the three ratios that you want to always look for: 23.6, 38.2, and then the golden ratio, 0.618. And you can see what happened after the rejection happened here. We went straight down to take out that zone over there, okay? Now, if we went down to -1, that would have been a full retracement. But obviously, it doesn't always work like that, okay? So, if we take out the 38.2, then you need to watch out for the 61.8, all right? That is the bearish extension. Now, if, for example, we retrace back to, let's say we came from here to here to here and then came all the way up, right? And we start to go up here, okay? The first point that you have to watch out for is these 2 points here, right before the one retracement. It's your 705 and your 786 retracements here, okay? And if for some reason, okay, we bounce or we get rejected here, then the next retracement is usually the 50 retracement, okay? So it shows you the sequence of how the waves are performing, all right? There are waves. Remember, the stock market behaves in wave patterns. So over years, you know, if you've been doing this over and over and over again, then you start to realize that there are repeatable patterns that you will see occur, okay? So for me personally, I've seen this happen so many times over and over again that I'm sharing with you what my experience is, right? The first thing that you will see happen is the 38.2 and the 23.6 levels being tested. Okay, that's the first thing. If you realize on every live stream that I've ever spoken about, those are the two levels that I always concentrate on, for even on SPY, even on NASDAQ. I'm forever concentrating on those two levels, right? And I'll show you what I mean on tomorrow's live stream, right? So that is for your retracements. Okay, retracements. That's how you do retracements. All right, pretty simple, right? Pretty straightforward, right? Okay. If you like the stream so far, I really appreciate you know, you leaving a like on the stream. I really do appreciate that. Okay, you know, honestly, you don't even need to donate, right? You don't need to donate if you don't want to. All you need to do is help me share this you know, this stream by sharing with your friends, like it, so that, you know, I can get other people to watch this, because I feel like this knowledge is free and should be spread. Okay. All right, let's read a couple of things here. I know this stream is going to drag on a little bit longer than expected, but we'll just go with it. So let's see here. Okay, so I answered this question about timeframes already. Loving the stream. Thank you. Appreciate sharing knowledge. No problem. Learning a lot. Thank you. Great. No better way to start the morning. Awesome, Miguel. I'm glad that you feel that way. On Fire Tea, this is amazingly detailed. Thanks for sharing. No problem, Prisha. No worries at all. This is exactly what we like to do. We like to break things down. Peel the onion. You need to understand that. Totally in absorption mode. Thank you, Invictus. Appreciate that. I'm very happy that you guys are enjoying this. Keep up the great work. Thank you. Good info. Thank you. Fibonacci is a hero. He is also in rhythm and music. Absolutely. Well, just trying to set up my charts to follow along. Oh, I got you. Okay. Yeah, Elliot. So I did explain it. So lightly tap the like button. Haven't had coffee yet. Oh boy. Great. Thank you. I think you should show this with a clean chart. Oh yeah, absolutely. I can do that. No problem at all. Thank you for the recommendation. Here we go. You got all of that out. There you go. Simple. Okay, we'll keep it like that for the next one. I'll show you how to do the extensions now too. With just candlesticks, like button smash. For candles with long wicks, would you plot the fib at the end of the wick or the body of candle? You always do it at the end of the wicks. Good question there, by the way, up top. Thank you for asking that one. Great question. You always use the wicks of the candles. Okay, always look at the most tip possible. Like for me, my mouse is a little messy, but look, you should go like that, right? It should be like that, okay? And you see where I plotted this one too. I use the best fit point between all three of these points, right? So you should go use that point, okay? Okay, now I want to take a little pause here to remind you guys of an announcement that we made yesterday. I'm not sure if you guys are aware. This Saturday, we will be signing up for the Everyday Growth Advisors Beginners course if you are interested. This is wave number 9. We have had 8 successful waves of these courses, and now we are going to be on wave number 9. Bring your attention to this really quick. It's going to be less than a 3-minute announcement because I want to make sure that you know about this. It's going to be a 5-day course, 3-hour live classes. I know a lot of people who are attending the stream right now have taken the course before. If you feel like saying something about the course, please go ahead, comment in the section so that people know about it. Tell people what you feel about it. And it's going to be a mentorship course where you'll be taught by me options trading beginners course, 3-hour live classes, and 2-hour live trading sessions twice throughout the 2 weeks that you will be with me. Okay. Today we will be holding another live trading session. So if you are a EGA mentee who is part of the alumni, please DM me if you want to join the live trading session. It will be occurring sometime 30 minutes after the market opens. We'll look for opportunities and trade together. As usual, these live sessions have been straight golden, and I think that it brings immense value to people. So today's live session will be concentrated on intermediate strategies such as spreads, and we'll be looking for those kinds of trade ideas. Okay, now for people who do not know about the course, here's a couple of testimonials you can read, or you can go see the testimonials on my Instagram. I'm not going to spend time reading them, but its core values are to build a sustainable systematic trading system using probability and statistics. People who have taken the course know this. Improve the odds of success through risk management. We put capital preservation at the forefront of your journey. It is not about how much money you make. It's about how much money we can help you save. All right. And fixing psychological barriers, of course, that trick your brain into auto mode. These are the core values of the course. Okay. Here's the curriculum. A bunch of really great stuff. If you want to learn about an end-to-end way on how you should be introduced to the stock market, this is the course for you. Introduction to indices, risk and reward, behavioral mistakes, technical analysis, how to plan and execute a trade. And I'm not just talking how to plan and execute a trade like the beginner level. This is my trading system. Okay. Trading strategies, learning about scalps, days, swing trades, planning entries and exits, wave patterns, supply demand zones, volume breakouts, intro to options trading, everything broken down for you. Intro to fundamental analysis, how to read earnings reports, valuing a business, how do you do intrinsic value calculation, and then finally, how do you use Option Swings platform, which is the community that I'm a part of, with almost 2,000 successful traders in being a successful, productive member. Okay. Not to mention, all of these are recorded and emailed to you every single day for unlimited lifetime access. And you have 2 weeks of access to the Option Swing Discord, which is an immense value on its own. All right. So the course is going to be $250 for Option Swing members and $330 for non-Option Swing members. Sign-ups will be on optionswing.com on Saturday at 12 p.m. Eastern Time. You cannot sign up now. If you click join now and you go down there, it's going to say it's sold out, right? This is the one right here. It's going to say sold out, okay? But on Saturday at 12 p.m., we will open enrollment so that it is fair for everybody, all right? Great. I just wanted to make sure that you guys know about that, okay? Awesome. So now let's continue on with the extensions on Fibonacci's, okay? Extensions on Fibonacci's. Now, extensions are a little bit of the same, but when do you use extensions, right? When do you use extensions? Well, the first things first is you need to find a ticker or a situation where a stock is breaking all-time high. Now, obviously, we don't have that specific example, right? We would have had an example like that with Starbucks, for example, right? If maybe we were trying to see that. We could have maybe used, something like this and try to see how that would have worked. Let me get rid of these lines here first, and then, we will be able to show you. I will show you what I mean by this. Okay. So for example, Starbucks was somewhere here, right? And you're trying to plot an extension, right? You want to know where can Starbucks actually ultimately go, right? How would you know where your price targets are? Yeah, the thing is, with your traditional indicators, you wouldn't technically know, right? Let's say I had all these, right? I had my support and resistance, volume, blah, 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 right? Okay, I know this is my resistance up here, but then where is the upside resistance, right? How do I know where are those points, okay? How do I know, right? So this is where Fibonacci can come in handy sometimes, okay? Now, I want to say the reason why people fail using this and the reason why I don't recommend it actively and why sometimes I have issues with recommending this process is because your view of where the swing high and the swing low may be different from my view. And that's the reason why some people fail. And that's the reason why I say if you don't know how to use Fibonacci's, then rely on a different tactic, okay? Now, you can use risk to reward levels. You can use many different ways to calculate your profit targets, okay? But let's show you how to use the Fibonacci tool. So earlier, remember we had a point A and a point B, right? So let's say this is the swing high, right? And where would the swing low be? The swing low would be here, right? This is your swing low, right? So this point here is your swing low. And let's just say it's somewhere here, right? But the point is, you need to talk about the best fit point, right? It's the best fit point. It's not really about where it's a single point. You could talk about here, but what I like to do is I like to use a midpoint between all of these points as my point for the Fibonacci. So now, earlier we went from a high to a low, right? We went from a high to a low to find the retracement. Well, if you want to find the extension, where do you go? Where do you go? You simply go from the low to the high. Okay, simple. So you have the and by the way, ignore this point here, right? We're not talking about this price action here. We are not talking about this. We're saying if Starbucks was at all-time high here, where would it break, right? We're not talking about these points over here. We're ignoring these points and saying, okay, Starbucks is here. Where are the price targets above? Okay, it's a hypothetical scenario. So where do we go? So we have this point here. So we know that this is the point where majority of the price action occurs, right? So we can do our swing low to the swing high. Boom. Now, all of a sudden, look where your extensions are. Okay, now you have a bunch of points above you that will be your extensions. Okay, and now for your bullish extensions, okay, bullish extensions, the important points are usually gonna be your 23.6, 38.2 will be the first suspects where you will retrace, and then followed by hit to the upside, right? Okay, that will be the first points here, right? Remember, you're gonna have to pair your Fibonacci retracements with a bunch of other things, right? This is just to show you the price targets. But remember, there's volume, there's OBV, there's your support and resistance, right? There is what else is there? There's moving averages, right? All of these things have to talk to each other to form this and solidify, excuse me, your trade opportunity. Okay, so for a bullish scenario, a dip on to touch the 23.6 is usually a bullish case. Now, you have to remember something about Fibonacci's here, okay? And I don't know if I spoke about this earlier, but the more shallow the dip, the more violent the rip, okay? The more denser the dip, the less violent the rip that follows, all right? This is usually the most commonly repeatable pattern. Now, if you have a very deep dip, then expect the extension to be very mild, okay? So you can see scenario 1, scenario 2, scenario 3. They differ in 3 very distinctive ways. It's the gravity or the intensity of the dip, okay? And you have to remember this. So if we see a dip that is generally pretty minute like this, then it would be safe to... Now, remember, this was actually before Starbucks sold off abruptly with the market, right? But if the market momentum was continuing and there were no external pressures on this stock, then Starbucks would have continued to rip. Now, what would be the first target? The first target would be the 61.8. That would be your first target. Okay? After which you could aim for the next target, which would be the 1 retracement. Okay? And then you can go from there to find the rest of the points, which would be further up above it. Okay? But the idea is the first retracement that you're looking for is the 61.8. All right. And remember, we are looking at a 1 hour chart. But if you were to look on a shorter time frame, like a 10-minute chart, you can see the exact same thing. So you would, first of all, you would delete this Fibonacci and go into a 10-minute. If you're looking at a day trade and you're like, okay, so where is Starbucks going to go to, right? And then you do the same thing here, right? You see this is your point here, right? That's the same thing. This is your swing low. This is your swing high, right? And what are you going to do? You're going to take that point there, right? Somewhere here, right? This is your most common point. You go up, you plot it up to here, right? And you can see, your 61.8 level is the first line of target here, okay? So this would be your first target for the upside, okay? Then you have 94.2, 96 point, and these will be the ones further up from there, okay? You can add more points if you wanted, like the 1.618, right, would be another one, right? The negative 1.618 because it's an extension, okay? And so now you understand what the basis is of Fibonacci. And now you also realize something. When the stock comes down, it also recognizes these Fibonacci and respects them. You see this over here. Look at the first line of defense at 23.6, and then we gap down, right? We gap down, and if something gaps down, then that's a whole new price structure there. And then what do? We came up, we tried to test the 38.2, and we failed. And then we went down, and what do? We actually blasted all the way to the 78.6, right? And then we came up, and guess what? We tried to retrace, so we came to the 0.5, and then the 61.8 here was the key level of a support, right? So all of these points here, they are going to be respected. Whenever you're approaching these zones, you got to be mindful that these are zones that may or may not be respected, okay? And that's basically the summary of Fibonacci's, okay? Like, obviously there's a lot more to this than what I'm trying to summarize here, right? There are so many different types, right? But the idea is you need to absolutely study this, practice it. Practice makes perfect, right? Okay. And I truly hope that this webinar was important, or it was pretty much helpful for you guys. Okay. All right. So let me see. Let's see here. Okay. How do you set up your Fib chart? Okay. So for a Fib chart, this specific one. Wait. Here we go. So you can choose a different style if you like. This is I believe it's a regular one on TradingView. So if you choose the regular Fibonacci, these are the things you can enable all the additional levels here, right? The 4.618, 3.618, 1.618. You can enable all of them. Okay, 2.618, 4.236. This is a double of the 2.618. But generally speaking, I like to keep it simple, keep it clean and easy to view these levels here. Change the colors, do whatever you need to. Click on this wheel, and you can amend and do anything you want. You can even extend the lines to the right. You can extend extended lines to this side, or you can change the colors. You can change whatever you want. Make the background a different color, right? Like you can make them like have this kind of thing, which I don't like. You can reverse the levels, right? Very quickly. You can do that. And then there are a whole bunch of different things you can do here. Okay. You can use the magnitude attached to the end of the wick. Yeah, you could do that as well. Course is 690% worth it. Thank you very much for saying that. Made my money back in about 2 weeks after processing everything. That's awesome, man, dude. That's really great. Still learning from it too. That's dope. Would we be learning how to use TOS as a trading platform? Absolutely, Kenny. That's we'll be using TOS to paper trade. So that's what we'll be using. What is the cost? I think I already shared this, so maybe you asked after. Tune in a little late, not sure if you covered this, but how do you treat volume going into key Fib to know if it's going to break or retrace? Well, that kind of goes out to the breakout strategy, right? If the volume, you need generally speaking, what you should do with Fibs along with this is to use the volume breakout strategy, right? For example, something breaks with good volume, right? And it breaks above the Fib level, it comes down, respects the Fib levels of support, then you can, start to take this to the upside, right? If you see a break up and then a break down below this level and, the inability to use this level as a support, then, you know that level's not a good level of retracement or a support, right? It's the same for the reverse also. There's my answer, so never mind. Oh yeah, that's what I thought so. Roku was all-time high, right? I don't know, was it? Oh yeah, Roku's all-time high. Yeah. So if you so let's do it for Roku, right? You can do a extension here. But realistically speaking, okay, so let me ask you guys a question here. Do you realistically want to do an extension here or a retracement here? That's the question. Can you extensions to the downside as well? Yeah, I did that already. I did the retracements already. Good info. Thank you, Jason. Appreciate that. Quartz has completely changed the way I trade. Thank you, Daniel. I appreciate you saying that, man. Definitely, I appreciate you very much. Can you please draw Fib extension for Amazon? Well, let's look at Roku first. Appreciate it. Looking forward to join the course. Yep, I hope I see you there on Monday, Kenny. I'm looking forward to having you there. Made back the cost of both the beginning and the intermediate courses very quickly. If you're serious about trading, especially if you don't understand why you're failing, you have to take the courses. Nelson, that is a very nice thing of you to say. Thank you very much. Courses are fire. Thank you. Especially if you ever wonder, why does God hate me? That is the EGA mental for sure. That is the EGA mental. Retracement. Yeah, Daniel, I actually covered retracements. Maybe you came in a little late. I covered it right at the start. Okay, so, I think you were answering this. Oh, sorry, I meant to say. Okay, yeah, so you absolutely want to do a retracement here, right? This stock has already run up, right? So you want to do a retracement. So, okay, so now you have your swing. So we're going to look at this on the 1 hour chart, right? We want this as a swing, right? We want this as a swing play. So now how do we start? How do we start to plot this? So, okay, we have, obviously we know our high is here, right? And this is the one, I'm going to do this last one and then we're going to end the stream because we're almost hitting an hour here. I actually want these webinars to be as short as possible, but they're so jam-packed with information. So I really hope that is valuable for you guys. So you have the high here, and where's the low? The low is actually somewhere here, right? It's like at this region here, right? It's this region. So you kind of have to, first of all, find your best fit line, right? So let's use a horizontal line to fit that, right? And this is your candle wicks here. You want to maybe go across these two candle wicks here, right? And we can use this as the kind of the line at which we can do our low from, right? Okay. Because this is the 2 points here, so it makes it a more stronger Fib retracement level. Okay, so we'll use the wick, the end here, right? And we're going to start from this side here so that we can get a bit more room here. And what we're going to do, we're going to simply bring this line down all the way down to our exactly the same line as we had drawn. So now what do you have? You have your retracements. Now you have your retracements, right? And so the first level that you will want that will be tested will be first this level, and then this 61.8, and then you'll have your 0.5, and then you'll have your 38.2, and then you'll have your 23.6, and then if all else fails, it's going to go all the way back down to 152, right? So now you know where your supports should be. These are your support levels, right? And in between here, you also have an additional level here that you should take note of, which will not be always shown, right? Okay. So simple and easy to understand. You see, when you break it down to this point where you know from the basics, what the hell is the Fib? How do you do the Fib? And doing all these different things. Then when you start to do it, it's so simple, right? But if I were to start this webinar and be like, okay, guys, so welcome into the webinar, and this is how you plot a retracement. So what we're going to do is just take a Fib and go from a high to a low, and I see a candle wick here, so here we go. Well, dude, first of all, why are you doing this? Number two, what is the reasoning behind it? Number three, what's the explanation? Give me the reasoning, give me the logic behind this. Right? You will not have the confidence to do this on your own because you don't understand what the heck you're doing, right? But if when you have everything explained to you, and see, majority of people will use the wick down there. Now, obviously, there's no right or wrong answer, but I would like to use this one here. Why? It's a stronger point, right? It's a stronger retracement. This is a more stronger point here. But to each their own, right? Everybody will have a different methodology, right? And it doesn't mean somebody's right or somebody's wrong, right? Okay? You just go off your own method. The point is, learn the right way. Don't use shortcuts, and I'm 100% sure that you will succeed. Okay? Okay, awesome. Well, kind of sad that we didn't hit 100 likes on this one. I was hoping that we would be able to hit 100 likes. You know, if you're here and, you know, you can take a second hour of your day to hit the like button, that would be nice. Really was looking forward to having, you know, people watch this webinar. It doesn't seem like people, you know. But anyway, let's see here. XLI appears to be in retracement 2. Answering, okay. Looking forward to more like these. Thank you. Thursday, we'll have one that does supply and demand zones. I'll show you how to plot those zones that I usually draw with those boxes. You know, like these specific zones, which, you know, I find usually, and I tell you, oh, this is a demand zone, this is a supply zone, those ones. So we'll do those on Thursday. I'll teach you guys those. And then apart from that, I think I'm going to end this webinar here. Would we sell calls for Roku since it hit the top fib level? Well, remember, hold on. Are you sure it hit the top fib level? Are you sure it hit the top fib level? Ask yourself that question again. Who drew this fib level? You drew the fib level. This is your top. As I told you, this is the conundrum, right? This is the problem with fibs. It's a self-fulfilling prophecy. Okay, remember that. Remember, that's the issue here. It's a self-fulfilling prophecy. What you see over here is what other traders are seeing as well. So what you might think is a top might not be a top for somebody else. Maybe somebody else drew the top here. Then, how do you explain that? Right? Maybe somebody else drew the top here. Right? What if I drew the top here? If I drew the top here? There are many different spots that you can think is the right top. So therefore, that's the reason why people fail doing these. Okay? And remember, it's a self-fulfilling prophecy. Do you not think that algorithms know and plot these levels themselves? They absolutely do. And this is the reason why you have to be absolutely careful. Okay? You have to be absolutely careful. Now, whether you would sell calls on Roku, that goes by a different thing altogether. Okay? But the point of the matter is, you have to come up with your own system. Okay? The courses are simply worth it. He literally provides the fill-in, the stuffing. Thank you, Jacques. I appreciate that. Thank you for your kind comments today, guys. Honestly, love reading them. I'm going to end this webinar here. I hope that it helped you out. If it did, please smash the like button. Leave a comment on it, something like that. I really like hearing from you guys. So have a great trading day. Happy Tuesday. And I'll see you guys tomorrow for fundamental analysis of Disney. We'll go through that. And yeah, share this stream with somebody if you think that, you know, they need it. Okay? Because remember, this is the power of free education. So have a good one, guys, and I'll see you guys tomorrow. Peace out and take care. Bye-bye.